What's going on, you guys? It's Cody Steck. Welcome back to another video. In today's video, we're talking about how Robinhood just changed the entire game of investing again. Not only has Robinhood changed it before by introducing commission-free trades, but they also just changed the game by dropping their margin rate to 2.5%. This is a flat rate, and it doesn't matter how much you've got invested. You're going to get 2.5% for your margin rate, no matter the size of your account. This is very different compared to other brokerage firms where you could pay upwards of 4, 5, 6, 7, 8, even 9% on your margin that you borrow. And so Robinhood doing this is going to massively change the game. We're going to talk about a couple different reasons why. Stick with me. I think you're going to like what I have to say. Let's jump right into things. As we jump into things, guys, I appreciate the early thumbs up here on the video. Consider sharing this video with a friend or family member who has Robinhood who might be interested in margin. We're going to talk about some of the good things and the bad things here in this video. Also, as we jump into it, comment down below. Are you going to use this feature with Robinhood, or are you staying completely away from the platform as a whole? Let's jump in. So Robinhood just announced that they're dropping their margin rate from 5% to a flat 2.5%. Now, you do have to have their Robinhood Gold account, which is only $5 a month. It's really not that bad, especially if you're going to be pulling out large amounts of money on margin, or even if you've just got large amounts of money invested in the platform. Having Robinhood Gold is probably not a bad idea. I did sign up for the free trial, and honestly, now that you've got access to very cheap margin money, this is probably something I'm going to keep, and honestly, I might take advantage of it. We're going to talk more about that here in just a minute. That $5 a month fee is absolute peanuts when it comes to the overall amount that you could borrow or the overall amount that you're going to pay. So honestly, just sign up for it if you're interested. Now, comparing this margin price to what other firms are offering, 2.5% is extremely cheap. That is probably one of the lowest numbers in the business, unless you've negotiated like free margin because you've got millions of dollars invested, or you've got the in with one of these firms or something like that. I think, honestly, 2.5% is probably about as low as it goes. Oftentimes, these other firms are going to charge most average retail investors somewhere between 6 and 8%, and it's actually usually on a scale based on how much you have invested. So if you've got less than 50,000, it might be 8%. If you've got less than 100, it's going to be 7%. If you've got between 100 and 200,000 invested, it's going to be 6%. And then it'll kind of scale up from there and usually increases as you get up to $500,000, $1 million, $2 million plus type thing. And honestly, for most of us retail investors and most of the Robinhood users, a lot of us are not going to have, the 500,000 or the $1 million invested in the stock market. I'd say that probably most Robinhood users probably have less than 250,000. A lot of them probably less than 100,000. And honestly, the vast majority are probably under $50,000 invested in the platform. So having access to cheap money like this, especially if you don't have a lot invested in the stock market to begin with, could open up a lot of doors. That's not to say that it doesn't come with risks. Of course, borrowing money on margin is going to have risks. I should also mention, if you guys don't know what margin is, it's basically borrowing somebody else's money, generally the brokerage firm, borrowing their money to be able to go out there and buy stocks and then paying interest on whatever that money is that you borrowed. It's basically the same as, getting a loan from the bank or getting a mortgage, right? You're basically just taking out money and using that money to go purchase stocks in the stock market. Now, the inherent risk with margin is that if your stocks that you've bought continue to decrease in value and they keep going down and further down and further down, the brokerage firm might call you up and say, hey, Cody, your stocks are dropping in value. You either need to submit additional funds to cover these losses, or we're going to take the right to sell those stocks and you're going to cash out at a massive loss. They can do this. Every single brokerage firm out there is going to have rules that allow them to sell your stocks whenever they want if they're decreasing in value to cover their losses on the margin that they've loaned to you, right? So they can do this without your consent. Oftentimes, they don't even inform you that they're going to do this. So you have to be very careful with margin. But before we jump into more details about that, let's actually continue talking about some of the pros and cons of using margin with Robinhood here. Given the fact that most Robinhood users probably have less than 250,000, probably ultimately less than $50,000 invested in the market, having access to cheap money like this is going to give a lot of people the opportunity to borrow money to go out there and buy more stocks. This is going to push more money into the stock market, and it's going to continue to push values up higher and higher. One of the things that I look at with this, and the reason why I've never personally used margin, is because when I'm looking at, what it costs to actually borrow margin, and I say, okay, for me, I think with Fidelity, it's like 7% or something, given how much I've got invested. I don't know the exact amount. I've honestly never looked into it, but I know it's around like that 6 to 7%, given how much I've got in the market right now with Fidelity. When I look at that, I'm thinking, okay, if I'm going to borrow this money and then pay 6 or 7% on it and take on that risk of having a loan and having, potential margin calls sometime in the future, that means that I need to produce at least probably like a 10% just to kind of break even and offset some of that risk. And while I do think that 10% is definitely doable, honestly, in order to do that, I want to look for these high returns. I'm going to have to produce at least 15 to 20% returns to be able to offset that margin cost. That's a very high return, and it's very hard to produce those types of numbers year after year after year. The stock market can be very unpredictable, and you can get big gainers, but you can also get big losers. So with a 6 to 7.5% margin rate, it's a little bit tough to justify that. But now I'm looking at this, and I know that a lot of other people are going to be looking at it the same way and saying, well, if I can borrow this money for 2.5%, and go put it into the market, this is going to give me the opportunity where even if I only make, let's say 5%, that's going to be enough to offset the risk that I'm taking on by having that margin debt. If I can have 10%, 15%, even 20% gains, that's going to drastically offset the margin cost that you've got. So that does give you the ability to offset some of that risk with even lower returns than we expected in the past if you're using that margin debt. I mean, at 2.5%, you could honestly just pull out that money and put it into an index fund tracking the S&P 500, and there's a very good chance you'd make enough money on an average year to offset the cost you have with that margin debt. The S&P 500 has had big gains and, a couple mediocre gains in the last couple of years, but on average, they always say, oh, it goes up 8% or 8.5% or whatever that number is. They always say, hey, this is kind of the average over the last 30 years, the last 40 years, whatever. So if you pull that out and you put it into an index fund and make 8%, but you're only paying 2.5%, that's not too bad. You just don't want to catch it on a year where the S&P is going to go down, because then you could be in trouble, right? So you do have to kind of look at it this way. If you can borrow at 2.5 and make 8, that's pretty good. But if you're borrowing at 6 and you're only making 8, not so good. Hard to justify, right? But the thing with margin is that it's not just all sunshine and blue skies, right? There is some risk to borrowing margin. Like we already talked about before, you could get a margin call where the brokerage firm says, hey, your stock value is dropping and dropping and dropping. You need to submit additional funds, or we're going to sell these stocks and you're going to take the massive loss because we need to cover our butts so that we don't lose money on this. So there is some risk with that, with the margin. So you have to be careful because you don't want to end up in a situation where you're forced to sell. In my opinion, if you're going to be borrowing margin, even at this 2.5% interest rate, you need to be careful and you need to make sure that you've got some cash sitting on the side, or you've got easy access to cash through like a line of credit or a credit card or a bank account, or even mom and dad to basically pay off any potential margin calls that you might have that come up if the stocks that you bought do happen to drop in value. I'm not saying that's the best option, but it could be a way to kind of bridge that gap so that you don't end up in a super terrible spot by having the brokerage firm actually sell the stocks that you own. So when I look at this big picture, I'm kind of looking at this and I'm saying, okay, Robinhood is going to change the game. They've already changed the game by introducing commission-free trades throughout the whole industry. This forced a lot of other firms to follow suit and do the exact thing. A lot of these bigger brokerage firms were losing clients to Robinhood because of this feature. So other firms now offer that same benefit and feature. Now, when I look at this Robinhood in the margin rate, if the market continues to stay good, there's a good chance that, again, they're going to be able to steal clients from other brokerage firms that are out there because of this lower margin debt interest rate. If that happens, I would not be surprised to see other firms follow suit and again drop their rates as well. I wouldn't be surprised to see them drop anywhere from 1 to 2% for each of their tiers. I know that's going to vary a little bit, but I do think that's coming, especially if the market stays good and if these firms look at it and say, hey, we think we could probably still make a profit, even if we have to tighten up our requirements for what, for when we're going to call on margin or anything like that. If they can tighten up those requirements and still make money, they might have to make that decision to follow suit and drop their rates as well so that they don't continue losing their clients to Robinhood. The one thing with Robinhood that does make me a little bit iffy is it's like, Robinhood has been in the news for some of the worst things in the last little bit. You don't ever see, scams or scandals or outages or all of these big problems that Robinhood has seemed to have over the last couple of years with these other firms. One of the things I love about Fidelity is you can literally call them up and get a rep on the line right away. Robinhood, not the same story. That's not going to happen. So when I'm looking at this, I'm kind of like, what do I do? Should I go with it? Should I stay away from it entirely? What do I do in a proposition like this? It's hard to give up, passing on 2.5% margin debt. But at the same time, it's like, I don't want to be caught in a bad situation if Robinhood has another outage or if they have a lawsuit or if they have some scandal or some issues, or my account gets hacked or whatever. I mean, you just never know, right? So it's a little bit of a gamble. It's something you got to be careful of, something I'm going to be thinking deeply about over the next couple of days. And just some thoughts there about kind of Robinhood and what direction you should go. It does make it a little bit hard to go heavy on this because other firms haven't had the same issues. And so I guess my advice to you is, look, just be careful with this if you're going to go in with it. And so guys, I'm going to continue thinking about this as to, hey, is this something I should jump into or should I just stay away entirely? honestly, I'm kind of leaning towards taking advantage of it, at least to some degree. This is a really good offer. I think Robinhood has a lot going for it. And I think that even though they have some shortcomings in other areas, I do think that those areas will get better. They're going to have to get better in order to stay in this game. Yes, they can undercut people, with the zero commission trades, or now with this lower margin debt interest rate, but they're going to have to increase their support levels and some other aspects of their business to continue to steal customers and, climb to be that #1 brokerage firm out there. So I'm kind of leaning towards it. I know here on the channel we did have a Robinhood challenge where I was trying to turn my $1,500 Robinhood investment into $100,000 by trading options, but this is like so enticing that I might have to switch that up, drop that, and see about pulling out some margin by investing more money into my Robinhood account and then being able to take advantage of that. So that is something I'm considering, to be totally honest. I think that could be a pretty smart move. I don't know. I'm still thinking about it. No commitments yet. I haven't done anything yet with this. I did turn on margin on my account just to see what it's all about. I read through the rules, I read through the fee schedule, I read through the agreements that you make with Robinhood when you do this, just so I have a full understanding of what's going on. And I might go for it, guys. I don't know. I'll keep you guys updated. I want to know what you guys think. What do you think? Drop a comment down below. I'd love to hear your thoughts on this. Are you going to pull out margin with Robinhood, or are you staying away from margin altogether? Are you staying away from Robinhood altogether? What are your thoughts? I want to know. Thank you so much for watching. If you guys made it this far in the video, I really appreciate the support. Give me that thumbs up. Don't forget to subscribe to the channel, and don't forget to check out the Patreon in the description below. The first 20 people who jump into the Patreon are going to get OG supporter access for just $1 and are going to have access to everything that I put out. Even for some of the higher tier stuff, you're going to get access if you jump in and you're one of those first 20 supporters. So I'm trying to grow this Patreon. We're going to be releasing a ton of stuff in 2021 for Patreon. I'm just trying to get it built and get it up off the ground. So I'd really appreciate your support if you do find your way over there. And with all that being said, I will catch you guys in the next one.